Hey guys, welcome back. In today's video, we are talking about the SEC hiding synthetic shares, the AMC 2021 again, how the squeeze will happen, and many more in this video. First, we're taking a look at this. The SEC just gave Wall Street another year to hide synthetic shares. So the original rule, which was supposed to go into effect December 31st, 2025, is now delayed to June 30th of 2026. And the chair of SE said, the days of unreasonable deadlines have passed. By extending this compliance date, we are giving broker-dealers additional time to implement daily computation under Rule 15C. And so what we are seeing right now is how they've once again delayed stuff that's going to negatively impact big institutions, the brokers, and essentially just the institutions in general. And once again, not protecting the retail. For those of you who've been keeping up to date, when we went through this last year and even the start of this year, what we have seen was multiple margin rules have been delayed, multiple rules that were meant to give more transparency were delayed, and now we just have another one. And if you want to take a look at another angle of understanding this, you can see broker dealers are really scared of the cat. They want at least a year extension before they have to report to the consolidated audit trail. What are they hiding? So remember, now they have they don't have certain obligations of broker dealers reporting to the consolidated audit trail CAT for at least 1 year, and that's the extension that they get. The consolidated audit trail tracks every trade while broker dealers, hedge funds, and Congress fighting against more sunlight. So in our previous video, we talked about how the CAT system has caught billions and billions of trade errors. Even in just one day, we saw over 7 billion trading errors, and that's in one trading day. And that's what the CAT system has exposed. And for the past few months, it has done so. We've seen multiple times where we've seen a large amount of trade errors all popping up. And now we're getting into a time where we understand that multiple brokers and multiple short sellers are in a stage where they've made positions, they've made bets that they shouldn't have actually made, and they've committed to it. And if they were to cover these bets, if they were to cover these shares, they would be in a very, very bad position. And when we understand we are at a time like this, and the only thing that's bringing transparency, that's going to bring fairness into the market, that will essentially bankrupt these companies who have committed these methods that they've done, it's being delayed. And so we can obviously see what's happening in the market right now. We can obviously see the corruption that is there. But more importantly, it's about understanding just how big this whole situation is. They're hiding the things that's going to make, what the corrupt things transparent. They're hiding the things that, if exposed, when everyone finds out, we will push for the cover of these shorts, which essentially bankrupt these institutions. They are all hiding it. And you have to remember, we are talking about institutions with billions, hundreds of billions of dollars, if not trillions of dollars. And they are the ones who are afraid of what's happening. So when we talk about the money that is at stake with AMC, with GME, when we talk about the billions of synthetic shares that they have created, and when they have to buy back, they have to pay thousands, if not tens or hundreds of thousands of dollars to buy it back. This is just proving that, because they are afraid of the whole system going down. And when we understand that there are trillions of dollars within the system, when we understand that certain institutions have access to hundreds of billions of dollars, then you realize that this is how much money they will have to pay us in order to buy the AMC shares back. And this is just one way that they are, of course, hiding it. Once again, I was expecting things to change when we had a new chair, but seemingly nothing is happening. They're just letting these institutions get away again. But like we've said, it's kicking the can down the road. Eventually, they won't have any ways that will help them get out of this whatsoever. You can see one of the reasons why they're afraid, and recently what we've had was Fidelity admits to restricting the buy button for GNS shares, allowing only sell orders. For those of you who find this familiar, this is exactly what happened with AMC and GME back in 2021, and we of course know this. And so right now they're doing this again. Now this is with a stock that has a way lower market cap than AMC, than GME, but yet it's still happening. Now, this is just another indication. This is just showcasing what is happening in the market right now. If you're wondering why brokers are trying to hide the data, well, the very fact they're doing this with a genius group, a company that has a tenth of the market cap of AMC, a tenth or even a bigger than the market cap of GME, you understand what is happening right now. You understand why they need to hide these data. You understand why brokers are afraid to show any transparency, because they are afraid of getting caught. They are afraid of showing how they screw over the retail in order to protect the institutions, even though it's the institutions who've committed these bad things, and the retail has been innocent, has done nothing, but of course invest in companies in which they find valuable, only to get stomped by institutions who think that they control the price and can just manipulate and steal off of retail. And so this is just another indication. When you understand what's happening with the volume, you can see high volume to the upside, bidders hitting the ask, and low volume to the downside, sellers hitting the bid, is bullish. Shows that not many high frequency trading algorithms are exiting. And so when we take a look at what's happening with AMC and GME, recently we've seen how institutions have been getting in. And I think this is another big reason for why shorts are afraid. In our previous video, we talked about how potentially we are seeing institutions who are in the benefit of the apes right now. They are on the side of long because they actually want a squeeze to happen. Now, if we have institutions, also participating in this play who also has the ability to control the price, then you can see how that's going to cause big things in the market. Now, ultimately, why are the institutions, then still protecting institutions, even though another side of the institutions want to get the squeeze? Well, that's because ultimately when the squeeze happens, you have to understand the people that will make the most money isn't going to be the institutions. It's the retail investors, it's the apes who have bought for the last 5 years, who have been in this for the longest, who have bought up the billions of synthetic shares that these short sellers have made. And that's what they don't want to give the money to. They don't want to give the money to the retail investors. They want to keep it within the institutions. And so they're doing anything they can to at least limit it for now. What I believe is a possibility is that if the moment all retail investors leave and it's all bought up by institutions, it's very likely they will be more lenient with the rules, in the sense that they will let some institutions go bankrupt, because the money is still ending up to another institution, right? And so that's why I think they're hiding it. Furthermore, you can also see just another showcase of what's happening when you take a look at the off-exchange volume for AMC. You can just understand what is happening. You can understand why we never see the real price. And ultimately, if you want to see the price being manipulated, if you want understanding, if you want data of how is AMC getting manipulated, getting suppressed, you take a look at the dark pool, and then you understand why we are not getting the real price discovery that we deserve. And so this is just another showcase of it. And of course, the CAT system, once again, when it exposes the transparency of everything, you understand what's going on. You understand how, there's going to be hundreds of millions, billions of trade errors happening for AMC, for GME. And that's what they want to obviously avoid. You have to realize 5 years coming up for myself, I haven't lost any faith with many apes. Glad this is where we took a stand. Can't wait for the event with all my apes. And this is where we have been. This is what we have been doing. This is what we have been, standing up for ourselves for. And is why I've said, we have been here for so long. We have bought up the real shares. We have bought up the synthetic shares. And ultimately, when the shorts have to buy it back, we know they have to pay at least thousands of dollars. Now, once again, I say this, everyone has a different floor price, so obviously make your own mind up with this, but it's about understanding how we will have the power when the time comes. And if you want to understand how the squeeze happens, you can see this. It's simple. Market makers who sold short to retail have the entire position liquidated by the prime broker. The prime broker buys our shares at any price we want so they can exit. It's a market buy order, hitting any ask at any price. And so you can understand when it comes to that situation of desperation, when they need to buy back the shares, when they are needing, when it's not even the institutions anymore, not the short sellers themselves, not the people who originally shorted the shares, it's the prime broker, it's the ones who've lent the money out to allow these institutions to short in the first place. It will be them who buy back, who sells these shares, because they will have to. Otherwise, they will lose all that money as well. And when we talk about how much money is involved with these prime brokers, like we said at the start, how much money is involved in the system, once again, you know why we will have an extreme floor price. Now, as always, none of this is ever financial advice, so do take our second. So make sure to do your own due diligence and research, and I'll catch you guys next time.